6 Key Steps for Investing in the Thailand Real Estate. Posted in Thai Real Estate Education on by Frank Sitar. The key to successful investing in Thailand or any other country for that matter is to know yourself. Only once you know yourself, your goals and attitude to risk, are you ready to start investing in Thailand. The 6 Essential Tips for Investing in Thailand guides you through the questions you need to ask yourself to determine what you should invest your capital in. It provides a high-level view of the options available to build a profile and how to manage and evaluate your portfolio once you have made your investment choices. This article is aimed at guiding individual investors to simple and successful investment in Thailand, without the need to go into complicated, in-depth analysis of financial data. All that is required is discipline. If you are new or interested in making an investment commitment in Thailand but do not know where or how to start, you should start by knowing yourself a little better. What are your investment objectives and goals? Always ask yourself what your investment is for. Maybe you have a particular project or a special purchase you are putting something aside for example, another auto or a wedding. Perhaps you simply need to see your reserve funds develop for a longer-term project or retirement. Maybe you need tax-effective productive investments, an investment that will beat inflation, or you simply need to make a profit. Know your investment financial plan and budget. What amount of money would you be able to or would you like to contribute to invest? Will it be consistent payment plan to investment over a time or a lump sum investment? Diverse goals will oblige shifting financial commitments. What is the time frame of your investment? For the most part, investments can be classified as either short, medium or long term. Short term would be an investment time of around 1 year. Medium term up to 5 years and long term, more noteworthy than 5 years. What is your attitude towards risk? It is vital to make this inquiry, as it will determine your investment portfolio and style. In the event that you have a low resilience to risk and hazard, you need to guarantee that your investment capital is safe. Moderate risk investors can acknowledge a level of vacillation, however less to exchange with the higher profits, and anticipate that investment capital will also grow. On the off chance that you have a high risk resistance, you are not very worried about market fluctuations and go for higher returns and anticipate that the investment will grow. Research investment options. When you know all the more about yourself, the next step is to comprehend the investment options accessible in the Thailand market. There are numerous options other than simply saving in a bank, which are safe investments, however by and large give low profits for investments and are suitable for very safe and low risk tolerant investors. You don't have to know all the choices accessible. Notwithstanding, there are 5 main classifications of investment, which are listed in accordance order to their level of risk. Reserve funds, saving accounts and fixed rate securities. Investing in Thailand real estate, rental condos, houses and villas, rental guarantee properties. Debt, government or investment bonds and debentures. Equity, ordinary shares and preference shares. Derivatives, futures and options. Investing in Thailand gold and Thailand property. In case you are not certain or have no experience in investing in Thailand and are not prepared to invest yourself and need an expert to invest for you, there are mutual fund options accessible. There are numerous mutual fund options accessible to suit all scopes of risk resilience investors. A percentage of the mutual fund options offer tax-effective investments, for example, long-term equity funds, LTF, and retirement mutual funds, RMF. For RMFs, people can deduct contributions of up to 15% of their own wage or 500,000 THB, whichever is lower, from their Thai assessable salary. The most effective method to start building your investment portfolio. Never rush to invest. A successful and fruitful investment needs a suitable portfolio for your particular profile. A decent portfolio ought to have the accompanying qualities. Risk balance via asset allotment. You ought not invest all your cash into one investment classification. Spread your investment more than a few classes. Property or resilience to risk. Adaptability. This is the capacity to change and modify your portfolio when market circumstances change. The key is to keep yourself upgraded and updates on Thai financial news and assess your investment technique and change appropriately. Suitable investment ratio. Your portfolio needs to have a balance between the generally safe assets, investing in Thailand which issue you a certain return, and the higher risk assets, which issue you a variable return. The ratio will differ relying upon your demeanor to risk. Portfolio diversity. As much as it is imperative to adjust your investment, it needs to be kept sensible. On the off chance that you have an excess of investment options, it will be hard to keep yourself educated on such a variety of diverse markets. Keeping your portfolio diversity to a sensible size will empower you to keep focused. Your Thai investment strategy. There are 3 basic systems for a successful investment. Dollar cost averaging, DCA, This is a methodology to diminish the effect of business changes by spreading asset purchases over the long run, as opposed to one irregularity total investment. Dollar value averaging, DVA. This is a recipe-based investment strategy developed by Professor Michael Lee Edelson, where a numerical equation is used to guide the investment of cash into a portfolio over the long run. Portfolio rebalancing. This is the methodology of modifying your portfolio in the event that it has strayed from your unique asset allotment by purchasing or offering segments of your portfolio. Pattaya Real Estate Agency. To open a securities exchanging, trading account for the Thai Stock Exchange, a foreign investor will need to contact the securities organization and complete the enrollment structure form. A few organizations have online enrollment and give points of interest of the documentation needed to open a record. The vast majority of the securities organizations have the office for investors to invest online. For more data on the Thai Securities Exchange, visit www.set.or.th. Survey and evaluate your investment. This is the last yet most vital part of investing in Thailand. Your investment status ought to be checked no less than like clockwork to a year, to your planned benchmark investment performance against your unique target. If it is not on target, you ought to rebalance your portfolio.